Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Limited damage. The Pentagon Defense Intelligence Agency says U.S. airstrikes did not cripple the core components of Iran's nuclear program. But U.S. President Donald Trump dismissed the findings as fake news. Fragile, but so far holding. Israel and Iran appear to be honoring a ceasefire brokered by Trump after the president lashed out at both sides for early breaches. And Trump appears to be undermining years of U.S. sanctions on Iran, giving China the green light to carry on buying its oil. Well, it's just gone 8 a.m. across the Emirates. I'm Shimana Bersachi in Dubai. I should say that there is a feeling of calm in the region, that fragile truce appears to be holding between Iran and Israel. Some strong words coming through from President Trump yesterday. And we're going to talk more about what happens next, especially regarding that nuclear program, with some DIA assessments leaking yesterday, suggesting that the strikes that the U.S. did over the weekend did not inflict as much damage as they had been presenting. So a big story for today. Before we get into the markets, I just want to bring you some breaking news that we're getting regarding European car registrations. So the overall number shows that European car sales have risen by 1.9% to 1.11 million in May. As for the details, you may be interested in some of the information that is coming through. Hybrids were a bright spot in May. Sales of plug-in hybrid models surged 46% in Europe. This is another interesting data point. Tesla continued to lose market share. The company's deliveries in Europe fell by 28% last month, with growing competition and, of course, the CEO Elon Musk's popularity waning due to his involvement in U.S. politics. The other data point, Chinese manufacturers continue to show strong growth in Europe. According to the data that's released, they are experiencing a doubling of their share to 5.9% from 2.9% a year ago. So overall theme is that European car sales have risen. They picked up slightly in May, jumping 1.9%. All right, let's check in on how markets are faring now that we can focus our attention back on global markets again. And I would point out that the S&P, take a look at where we are right now. Futures not doing a whole lot, and yet we are very, very close once again to all-time highs, about 0.85% from the all-time record high reached back in February. The Nasdaq actually has reached a record high once again. So yesterday, the Nasdaq closing at a new record. Asia Pacific this morning, the handover moderately green, up 0.2%. Obviously, very strong session yesterday after that ceasefire was announced. And European markets also building on from some of that momentum, up 0.2% for the year now. European markets also up about 8%. So a lot of the volatility of April, May, even the last couple of weeks on geopolitics has been sort of superseded by optimism in some of these bourses. So that is the picture now. And then obviously Brent, we continue to track very closely. $68 is where we are at. So we have dropped significantly in the last couple of days. The biggest drop for oil since 2022, $68, completely unwinding all of the geopolitical risk premium that was built in after the war started. Flipping over, there's something else I want to draw your attention to. I thought this was interesting because people have already started to look ahead to what happens once the Fed Chair Jerome Powell's term ends, and take a look at the spread between the month where his successor comes in versus where we are right now. And you'll see that investors have started to price in a more dovish Fed chair coming in after Jerome Powell. And of course, that is in reference to the fact that President Trump would like to see lower interest rates, and the current chair isn't quite delivering on that. So perhaps the next chair will. This is what markets are pricing in. All right, let's go back to geopolitics and the region. Early U.S. intelligence findings suggest U.S. airstrikes only had a limited impact on Tehran's nuclear program. Sources tell Bloomberg a report by the Pentagon's Defense Intelligence Agency says the bombing probably did not cripple the core components of Iran's program below ground, including its centrifuges. President Trump was quick to deny those findings, saying again that Iran's nuclear sites have been completely destroyed. Meanwhile, a fragile ceasefire between Iran and Israel appears to be holding, with no reported attacks in the last few hours. Trump lashed out at both countries over early violations, using language we haven't heard publicly from him before.
I'm really unhappy if Israel's going out this morning because the one rocket that didn't land, that was shot, perhaps by mistake, that didn't land. I'm not happy about that. You know what? We basically have two countries that have been fighting so long and so hard that they don't know what the they're doing. Do you understand that?
Okay, that's interesting language to hear from the U.S. president. Let's go to Jerusalem now and Bloomberg's Dan Williams. Maybe let's just start with the latest reporting overnight. Those assessments put out by the Defense Intelligence Agency, a part of the Defense Department, suggesting that Trump's characterization of those strikes and that they achieved a complete obliteration of the nuclear facilities was a bit of an exaggeration.
Indeed. Hi, good morning. Well, yes, I think what we're going to see is this debate being coextensive with attempts of the warring sides, the formerly warring sides, to shape the narrative around the ceasefire. Who could claim victory, who at least can claim to have denied the other side victory. And here we are. One of the high points of this war, of course, was the U.S. involvement in bombing those three core sites. We have officially, from the outset, President Trump saying that the nuclear program was completely obliterated. He said this within hours of that attack taking place. Israel was more measured in its assessment, but as of yesterday evening, its top general, Eyal Zamir, said that the nuclear program of Iran had been set back years, which, of course, is also hard to reconcile with this latest Bloomberg report or the latest intelligence received by Bloomberg. Much will be settled if and when international inspectors are allowed back into those sites. That is an open question, given what Iran appears to be saying now, which is that it refused to cooperate with the international community, may even review its participation in international safeguards arrangements around its nuclear sites. So we may not know for the coming future. And I think what's going to happen is Israel is going to be watching those sites for signs of reconstruction, reconstitution, and maybe measuring whether it could afford to weigh back in, given that this is a ceasefire that's been sponsored and guaranteed by the President of the United States.
Well, no doubt it is a setback, but how much of a setback is going to be the overarching question. As for the state of the truce, there was a lot of noise around it at the beginning, at the start of the ceasefire yesterday. It was unclear at what time it actually had been implemented. We're now 24 hours later. What is the status?
Well, it's holding. Both countries are slowly returning to normal life. I can tell you that in Israel, you can already hear the buses running in anticipation of a school day. The schools have reopened pretty much across the country, except I believe in one city in the south that suffered a big missile attack just before that truce took effect. The economy is reopening. Flights have restarted, and there'll be a lot of people, including stranded tourists in Israel, Israelis stranded on business or holiday trips abroad, who will be wanting to take those flights. So I think many in the Middle East, and this would include Iran and Gulf countries that are also affected by this conflict, will be very keen to draw a line under this conflict, get on with their lives. The question, as I said, is whether there will be some kind of resumption should one of the parties scrutinizing Iran and its nuclear program, specifically Israel, see a need to weigh back in militarily around that nuclear program, around the missile program, which Israel went to war saying it would destroy and apparently did not destroy completely.
Dan Williams, thank you so much for the update. Joining us now is Omar Rahman, fellow at the Middle East Council on Global Affairs. Omar, good to have you with us. Maybe just your take on what you think actually happens next. Firstly, between Iran and Israel, do you think this truce is going to hold?
First of all, thank you for having me, Jumana. I think, we've seen both leaderships go back to their people triumphant, expressing that they have come out on top of this. So I think for all intents and purposes, we could probably see this ceasefire hold. At the same time, there's a lot of uncertainty over the fate of the nuclear program, if Iran emerges and it's known that its nuclear facilities have survived these massive attacks, then perhaps that changes the equation somewhat. But I think Trump is adamant of constructing this narrative and won't let even his intelligence agencies undermine that narrative that this was a great success, that he destroyed Iran's nuclear program, and now that peace can kind of emerge in the region.
What do you think this 12-day war has done to the perceptions of the Iranian regime within Iran? They have sustained a lot of blows, both militarily, defense, on nuclear, and also in terms of leadership. Could there be a movement from within Iran to exploit some of the weakness?
Well, we also saw, a rallying around the flag in Iran from I've heard numerous scholars in Iran, inside and outside, discuss that phenomenon that's happened, that it had kind of a reverse effect that that Israel may have anticipated, that it was able to strike and weaken the regime, and therefore provide an opportunity for other forces within the country to rise up. And we saw the targets that Israel was pursuing were not just the nuclear targets, or killing certain regime leadership or nuclear scientists, for example. They were targeting police stations and the installations of the government that allow it to kind of maintain control over the population itself. So I think there was that intent by Israel, that secondary objective of weakening the regime to the point maybe of regime collapse or potentially regime change if there were other forces. But Iran is a massive country. This regime is very entrenched. It's been around for decades now, and it has been able to maintain its control over the population, even in the face of wide-scale demonstrations. And I'm not so sure there are those polls or maybe the kind of actors there, organized actors that could rise up in an insurgency and overthrow the regime. We just don't know that to be true.
Yeah. One of the big questions. And it looks as though the attention has now shifted back towards diplomacy. What appetite do you think there is out of Iran to return back once again to the negotiating table? Also bear in mind that even before this war, the economy was crippled by years of sanctions.
It's a very good question. I mean, we've heard the Iranian president already and foreign minister discuss a willingness to go back to the negotiation tables. I think a primary concern is removing those sanctions that have been in place and have crippled the Iranian economy for a very long time. At the same time, what leverage it has to go back to the negotiation table if its nuclear program has been completely obliterated, in the words of Donald Trump, I don't know. At the same time, if it's still in place, I can't imagine that the terms of negotiations and the obstacles that were in place that prevented, a diplomatic resolution of this have changed. I think they've even gotten probably worse. The trust that's needed between the sides, has had to have suffered as a result of both the duplicitousness and the ruses that the American president used to allow this war to continue. He feigned that he was proceeding towards negotiations in order to allow the Israelis to go there. We heard the U.S. Secretary of Defense talk about misdirection that was used. At the same time, the U.S. government, the U.S. military, struck Iran at its nuclear facilities. So I think trust is severely undermined at this. And there's also other.
But at the same time, I was going to say, at the same time, and you say that, but then what other options does Iran have if not going down the diplomatic route? The red line for the U.S. has been established. And even when President Trump posted about the ceasefire, he did say we will not hesitate to act militarily once again if Iran does not return back to the negotiating table, or if they try to restart the nuclear program in an attempt to build a weapon. So what other alternative does Iran have right now?
Yes, I mean, this is the question itself. So if they go back to the negotiation table, is Iran going to go there to capitulate? I doubt that's the case. So if the United States is demanding, as Trump did prior to the outbreak of war, that Iran give up nuclear enrichment entirely. That's its red line, and that was a non-starter for the Iranians. What's going to break that, impasse? I'm not quite sure, but we have to kind of unpack again. What is the purpose of nuclear weapons? Nuclear weapons are not an offensive weapon; they're a defensive weapon, their ultimate defensive weapon. Iran is feeling very vulnerable at the moment. Over the past 21 months, its forward defensive structure in the region has been totally debilitated. It just faced the worst attack on its homeland since the 1980 Iran-Iraq War. So what does it perceive as the best avenue to secure itself from future attacks on its homeland and for future attempts at regime change, for example? That may be the pursuit of nuclear weapons clandestinely. We don't know what happened to the highly enriched uranium that was supposedly moved out of those sites in the days prior.
Yeah.
So, sorry, I didn't know if you were stopping me there or just agreeing. Okay.
Yeah, no worries, no worries. Okay, we'll leave it there. Omar, thank you so much for joining us today on the show. Really good to get your perspectives. Omar Rahman, fellow at the Middle East Council on Global Affairs. Well, still ahead, we'll continue the conversation around the truce, but focus on Iran's proxies and relations with its Gulf neighbors with Hasan Alhasan from the IISS. But up next, we discuss the impact of geopolitics, oil, and Fed messaging on markets with Aarthi Chandrasekaran. This is Bloomberg. Fed Chair Jerome Powell has faced questioning on Capitol Hill, repeating that policymakers need not rush to adjust rates as they wait more clarity on the impact of President Trump's economic policies.
The effects of tariffs will depend, among other things, on their ultimate level. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance.
Let's get the outlook for the Fed's rate path amid all the geopolitical risks with Aarthi Chandrasekaran, head of asset management at Shuaa Capital. I'm sure if we did one of those word cloud things where you count the number of times he says a word, the word wait would come up a lot. They are most definitely in wait and see mode. Do you think that's the right path right now for the Fed?
I think so too. I wish we have 2 rate cuts this year, but the odds of not having a rate cut has significantly increased. I think Fed, from whatever he has spoken so far, they are very long-sighted on inflation expectations. They're very short-sighted on labor market. When it comes to inflation, they look at policy rates, they look at tariffs, they look at the spending bill, they look at the tax cut that's going to come in the summers, and the long-term inflation expectation. When it comes to labor market, he just wants to look at one number, which is the unemployment rate. He doesn't look into the simmering issues on the labor market, which is jobless claims and all of that.
It's funny that you say that because it makes me think perhaps there is a bit of recency bias because policymakers, central bankers are scarred by the experience of COVID, calling inflation transitory and then, of course, reacting way too late. Maybe this time around, they don't want to fall into the same trap. So they're running the risk of keeping rates too restrictive for too long, even while the economy is slowing down.
That's very true. That's very true. Because I think what would make the Fed hold the rates is obviously inflation, higher inflation expectations. But what will make him cut or to ease would be the unemployment rate. As long as unemployment rate doesn't inch up, Fed is unlikely to budge.
Yeah. So are we in this Goldilocks scenario then for markets where this part of the world, tensions seem to be calming down. You've got a Fed that's in a wait-and-see mode. Maybe we'll cut 25, 50 basis points, but the data is not so bad that we're looking at a potential recession or even negative numbers in the coming quarters.
I'm not looking at a recession, definitely, but we also have to understand the hard data is softening. You're seeing a retail sales, which is slowing down, the home sales, the construction data, and even the job market. Look at the unemployment rate for new graduates, 6.1% versus the national average of 4.2%. So it's inching up. You are seeing job losses, but then the markets doesn't care. S&P is still so high. It is kind of erased all the losses so far this year and trading at 22 times earnings, very frothy valuations.
Yeah. And perhaps because the markets are pricing in lower economic growth, but not negative economic growth, and that's the distinction. So there is an avenue for the Fed to cut interest rates with a moderate decrease in the data, a moderate slowdown in the data.
That's true. We came in with an economic growth of 2.2% initially, but right now we're running at about 1.2% for this year. So this is definitely a slowdown, which means the market doesn't really have to have negative performance, but it might not have phenomenal returns as we have seen before.
Yeah. Why do you think markets are so complacent now about tariffs? We've got another tariff deadline coming back again on July 9th. Why is that no longer as big of a concern?
I don't think it's just about the markets, right? Look, if you look at S&P, it's kind of up from the last 6 to 7 weeks from the lows. But if you look at the underlying numbers, cyclicals versus defensive and short, like the short-term numbers to the long-term numbers, everything is still trading at very April lows. It's only the Max 7 which has rallied significantly so far. So I guess it's all about earnings expectations. As long as your Max 7 numbers are going to deliver those earnings, the markets and the investors want to not think about the tariff because they think the tariff, which is embedded in the market today, is 14%, which I think they can still handle it. But as long as your earnings expectations are going to be good, the earnings numbers are going to be good for the Max 7, it's just rallying on base with that.
Yeah, in an environment where we're still pretty much seeing high yields in the U.S. and volatility has once again started to come down, does it make sense to then reinitiate some of those carry trades that were so popular in the run-up to last year?
On the high yield, I mean, on credits in general, we are very constructive on an all-in yield term perspective, right? I would still be more comfortable with investment grade names, just because if you have a slowdown in the economic growth and not necessarily a recession, but just a slowdown, you would see this spread widening. The credit spreads are extremely tight, both on investment and high yield. But high yield is way more tighter than investment grade. So even if the spreads widen on the investment grade, you still get absorbed by the baseline yield, because you might have Fed probably coming in and cutting rates. So IG looks very interesting to be best place or best position to be at the moment. But you want to play a bit on the high yield, on the high quality names and shorter duration.
Aarthi, so good to have you on the show. Thank you so much. That was Aarthi Chandrasekaran, head of asset management at Shuaa Capital. And coming up, we speak to the CEO of Omani Infrastructure Fund, Rakiza. That is live from the AIIB conference in Beijing. This is Bloomberg. And a look at equity futures. Markets are leaning sideways after a better end to the day yesterday as we talk about a de-escalation in the region and a focus on Powell's testimony. Coming up, we speak to the International Institute for Strategic Studies as the fragile ceasefire between Israel and Iran holds. We discuss what is next for Israel and Iran's isolation. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Limited damage. The Pentagon's Defense Intelligence Agency says U.S. airstrikes did not cripple the core components of Iran's nuclear program, but U.S. President Donald Trump dismissed the findings as fake news. Fragile, but so far holding, Israel and Iran appear to be honoring a ceasefire brokered by Trump after the president lashed out at both sides for early breaches. And Trump appears to be undermining years of U.S. sanctions on Iran, giving China the green light to carry on buying its oil. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Barsechi in Dubai. Well, what can I tell you? Calmer waters today. The truce seems to be holding up as signs of life, of things returning back to normal. Dan Williams, our reporter in Jerusalem, was just telling us things are returning back to normal for both Israel and Iran. But of course, so many questions from here on about the longevity of this truce and what happens to that nuclear program and indeed to nuclear diplomacy. So we'll raise all of those questions with our next guest. Markets paying a lot of attention to Powell's testimony yesterday. Again, keeping the door open once again to multiple different paths. Several policymakers had suggested that a rate cut as soon as July was a possibility. Powell didn't really endorse that language, but did seem to suggest that all doors were open should the data start to deteriorate. But on the back of that, we've got S&P futures trading sideways, getting very close to all-time highs once again. We're about 0.9% away from those all-time highs. The Asia-Pacific handover also pretty positive as well, up 0.3%. European markets too, as we focus on that NATO summit that's taking place today. And then Brent, seeing some stabilization at these levels. We're back to around $68, 1.3% firmer this morning, but of course down 15% over the course of the last 2 days, with all of that geopolitical premium that was priced in around the 12-day war having been unwound. So a lot of volatility in the oil space, and a lot has come out just in the last 24 hours. And let's switch over quickly and take a look at the terminal chart. I thought this one was interesting because investors are looking ahead to what happens after the Fed chair Jerome Powell's term ends, and already pricing in a successor who's more dovish than Powell is. So this is what interest rate markets are implying. A very, I should say, steep or maybe shallow curve, depending on how you're thinking about it, i.e. investors are just pricing in more rate cuts out of the Fed next year once the new Fed chairman steps in. So, or chairwoman, I should say. It could be anyone. But that was an interesting thing to note as investors look ahead. All right, let's go back to talk about energy markets. Oil prices have leveled off after a steep 2-day plunge. That's as traders assess the Israel-Iran ceasefire and a report pointing to a further drop in U.S. stockpiles. Before the reversal, crude tumbled further after President Trump's announcement that Iran's biggest customer, China, can continue buying its oil. The move could undermine the key element of Washington's Iran policy under multiple administrations, which is aimed to cut off the regime's main source of income. For more, our executive editor for MENA and Russia, Stuart Livingstone-Wallace, joins us now. Before we talk about the moves in oil prices, lots of attention about this Truth Social post that President Trump put up, saying that essentially he's greenlighting China to keep buying Iranian oil. How should we read that? The White House came out yesterday to say that this doesn't mean that they're waiving sanctions, but still pretty notable.
Yeah. I mean, you'll be shocked to hear we don't know, for a change. And look, the headline on our stories today uses the word baffled, and I think that is the key word here, because it certainly took Treasury and state officials by surprise. It took the oil traders by surprise. I think it took all of us by surprise. And we're just trying to parse out what it actually means. Now, the interpretation from the White House initially is, yes, he kept Hormuz open, or at least removed the threat of it being closed. That allows the oil to flow. Others are perhaps interpreting it as maybe there is going to be a significant change here. You know, it is leverage in terms of his talks with China over tariffs. It's leverage with Iran over the continued ceasefire. So maybe there is change coming. Anyway, basically, we're going to find out.
Leverage being sanctions relief in this point.
Yeah, exactly.
Yeah. Okay, oil prices, quite the volatility the last couple of weeks. We're back to where we were, essentially. What are we looking out for in the coming weeks?
So I think now attention turns back to global demand, you know, and the supply on the market. So OPEC, or the OPEC Plus, I should say, continues to add more and more barrels. At the same time, I think there are deep concerns about what demand will look like going forward. I don't think anyone's suggesting it's falling off a cliff. But you're getting imbalance in the market, and I think particularly the last couple of weeks has kind of masked that trend.
Yeah.
That trend is now firmly intact, and we go forward from there.
Yeah, and many analysts talking about the potential for a big supply glut once summer demand is out of the way. So I guess we'll just go back to focusing on the fundamentals again. Stuart, thank you so much. Good to have you with us talking about oil today. Stuart Livingstone-Wallace, our executive editor for MENA and Russia. Well, the fragile ceasefire between Israel and Iran does appear to be holding. During a war that lasted 12 days, Iran found itself isolated and alone, while its network of partners in the Middle East stayed on the sidelines. Key proxies, Hezbollah, the Houthis, and Hamas are weakened, while the state ally, the Syrian regime of Bashar al-Assad, has fallen. But Tehran has been building ties elsewhere, shifting closer to Russia and China, and mending relations with the UAE and Saudi Arabia. So what's next for Iran and its neighbors? Joining us now is Hasan Alhasan, Senior Middle East Fellow at the International Institute for Strategic Studies. Things are a little bit calmer today, so it gives us the opportunity to sort of step back and analyze everything that has gone down the last 12 days. One of the big questions that people were asking was, where were the Iranian proxies? Where were Iran's allies? No one stepped up to help and support Iran militarily or with its defense.
Well, that's absolutely right, with the partial exception of the Houthis. I mean, the Houthis did claim to continue striking at Israel. They claim to have launched coordinated strikes with the Iranian Revolutionary Guard Corps, the IRGC, against Israel during this 12-day conflict. So I think the Houthis have been degraded by US and UK airstrikes that began earlier in the year, but they are still very much in the game. As for the rest of Iran's armed non-state groups in the region, Hezbollah has been isolated from its supply routes that would have normally run through Syria and is very much in a weakened position now that its leadership has been decapitated multiple times, as a matter of fact. And then, of course, with Syrian former Syrian President Bashar al-Assad no longer in power, and an anti-Iranian administration currently in control of Syria, the situation for Iran's regional partners looks very different than it did 1.5 years ago. So I think we have to contextualize the current conflict between Israel and Iran in the context of a wider and longer confrontation that has been taking place for at least 1.5 years, and where significant elements of Iran's strategy, notably its regional partners, are no longer in effect, essentially.
Yeah, so actually this leads nicely to the next question I was going to ask you. Do you think one of the upshots of this war, and indeed everything that has been going on in the last 20 months, is that the Iranian regime will have less sway and less strategic influence in the region going forwards?
So I think Iran emerges out of this conflict definitely weakened, defeated in the conventional military sense of the term, intact, so it hasn't collapsed internally yet, but I think very much vengeful. And the analogy I like to use is that of Iraq post-1991 Gulf War, where Iraq also emerged very much under similar conditions. Now, the issue is that weakened doesn't necessarily mean less dangerous, because let's remember that Iran continues to possess the capability, the short-range ballistic and cruise missiles, the UAVs, the USVs, to be able to project power within its immediate neighborhood and to be able to threaten its immediate neighbors, especially in the Gulf region. That capability is still very much intact. It wasn't high on Israel's priority list because it doesn't represent a direct threat to Israel. And we've seen this red line being breached, where Iran has directly attacked one of its neighbors, Qatar, this time around, in retaliation for the US strike on the Iranian nuclear facilities. So I think Iran does emerge weakened, it's intact, but it's very much vengeful. It continues to be able to threaten its neighbors. And I think the crucial aspect here is that Iran is still intent on enriching uranium domestically. It still has the intention to rebuild its nuclear program. And I think the risk this time around is that it might choose to do so in a covert, secretive manner to avoid the kind of scenario that we saw playing out over the past 2 weeks.
Yeah, and of course that raises questions about whether the U.S. would then have to militarily intervene once again. Even when President Trump announced that the ceasefire, he said that they would have to act again should Iran move towards building a nuclear weapon. And indeed, Israel sort of used the same language as well. So is it too soon to say that this episode is behind us then?
That's exactly right. I tend to see that essentially all of the ingredients, all of the elements for a protracted confrontation with multiple rounds of fighting and conflict are very much in place. Iran is still intent on enriching and on developing its nuclear program. It still has the human and scientific capital to rebuild much of what was destroyed. And Israel essentially remains unrestrained by Washington and unrestrained by international law. And I don't see the United States shifting gears and all of a sudden playing a more stabilizing and constructive role. We've seen how difficult it has been to predict what the United States is going to do, and I think that has been highly destabilizing. So I think the only sustainable way out of this is that we see a sustained and serious effort at conflict resolution. That is something that the Gulf states will have to work on I think, very hard because the stakes for them are extremely high, where we get to the parameters of a deal that is acceptable for all sides. That covers nuclear, but also other relevant issues. Without such a long-term sustainable deal in place, everything is in place for us to see a repeat of what happened over the past 2 years.
Okay, interesting place to leave it. Hasan, thank you so much for joining us. Hasan Alhasan, Senior Middle East Fellow at the International Institute for Strategic Studies. And coming up, we speak to the CEO of Omani Infrastructure Fund, Rakiza, next. That is live from the AIIB conference in Beijing. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetti in Dubai. The Asian Infrastructure Investment Bank's annual governors meeting is underway in Beijing. The lender is aiming to deepen partnerships and mobilize resources within its 38 member countries. Bloomberg Insight anchor Hazinda Amin is there with our next guest.
Hi, Jumana. Here with me is Muneer Al-Muneeri, CEO of Oman-based asset manager Rakiza. It is a $1 billion fund which invests in infrastructure, and it is one of the largest funds in the GCC. Muneer, good to have you with us.
Thank you very much. It's a pleasure.
First time on Bloomberg TV.
Yes,
Give us
indeed.
a sense of what you're investing in. What have you been investing?
Certainly. Rakiza is, as you stated clearly, we are investing geographically in Oman and KSA, and we have $1 billion. We mainly invest in core infrastructure assets, such as, of course, logistics assets, power assets, social infrastructure, and certainly digital infrastructure. We've been investing mainly over the last 5 years in Oman and KSA, as I stated. We have 5 assets. We have a port, a share in a port in Oman. It's called Shuaa Port, which is the main gateway container terminal in the north of Oman. We own also 30% in the largest independent tower company in Oman. It's called Helios Oman. And we own a stake of almost 40% in Oman Broadband, which is also the monopoly provider of fiber to home in Oman. We own also 40% stake in a power plant in Saudi. It's called Tihama. It's operated for Aramco. And we also own the first PPP projects in Oman in nature of logistics hub for food sector, mainly fruits and vegetables in Oman also. So these are the assets that we own today. We have deployed 50% of our capital, and today we're definitely happy to be here attending the annual general meeting of AIIB.
5 assets in a country and a region with a lot of opportunities. What are you looking at in the next 12 to 24 months? What might you be interested in?
I mean, the same sectors that we're focusing on. So we see more opportunities in the water sector. We've seen more opportunities lately in the digital infrastructure also. And we continue looking at opportunities that will give us the right risk-adjusted return for our investors.
So what kind of returns are you anticipating?
We are a double-digit return investor, low to mid-teen investor, and we've seen these opportunities in the region lately. And
what's double-digit? Is 10 to 99?
I would say low to mid-teen. That's the type of returns that we're providing for our investors.
It's also a region where a lot of international investors and funds are delving into the likes of KKR, for instance. How are you looking at the competition coming from foreign funds?
Certainly, that is our story. We're a local, basically, and regional champion. But we started in the region early. We understand the market well. We speak the language of the market. I mean, we're pursuing and analyzing and reviewing many opportunities within the region. And what makes us special is always that we know the local content. We understand the legal framework, we understand the legal framework, and we were able to demonstrate to many strategic investors that we are the right local partner for them. And certainly we're also been able to get some of the off-market transactions because of our nature as a champion on the regional market.
Which sectors are still underpriced? Which assets are still underpriced?
It's a tough question, I would say. It's difficult to see that the market today has good liquidity, and the market, I would say, most of the time it's either overpriced or priced at the right returns. But definitely going forward, we'd see more transactions coming into the market, especially when you talk about the social infrastructure, PPPs, we'll talk about when we talk about outside digital infrastructure. These assets are growing by the nature of the economies in the region. I would assume that you would see good returns on some of these investments. It depends market to market in the region. You know, we have a different legislation and markets within the region itself.
We're talking about investing in a region where there's been a lot of volatility, especially on the back of the attacks in Iran. How is that impacting sentiment, especially foreign sentiment?
Definitely on short term, it will impact sentiment, and it may cause, of course, some repricing of the risk. But ultimately, we are an infrastructure investor, and infrastructure by nature is resilient, as it's designed to be resilient. You know, it's a long-term investment. Usually, it is essential service for an economy, such as power, water, ports, and the rest. And also often it's backed by long-term contracts or a concession agreement that also somehow it protects you from all of these volatilities. So it's in nature actually somehow resilient, as I said. And we are in a region where we understand also these risks. We've seen it, and we were able to basically select the right opportunities for this.
Is that being reflected in the FDI? What numbers are we looking at for Oman, and where is money coming from exactly?
I mean, Oman for 2024, the number, if I'm not mistaken, is around $10 billion that we managed to basically raise an FDI for that year itself. And mainly, of course, coming from UK, from US, and from Europe countries, and also from the GCC countries. And I would say still oil and gas is dominating most of this money, but we've seen double-digit growth, around 17 to 15% growth in manufacturing, in financial services, and in real estate.
Muneer, good to have you with us. Come back again.
Pleasure. Sure.
Muneer Al-Muneeri, CEO of Rakiza. Jumana, we're coming to you live from the AIIB Forum here in Beijing. Handing it back to you.
Brilliant, Haslinda. Loving your coverage all morning. Thank you so much for that interview. Haslinda Amin, Insights anchor with Muneer Al-Muneeri, CEO of Rakiza at the AIIB in Beijing. Now, coming up, NATO Secretary General charms Donald Trump in a private message as the U.S. president cast doubt on the military alliance. More on what he said next. This is Bloomberg. The European Union's industry chief says the bloc plans to impose retaliatory tariffs on the U.S. if President Trump keeps the 10% baseline levy on European products after negotiations. Brussels is rushing to clinch a deal with Washington before tariffs jump to 50% on that upcoming deadline, July 9. However, many EU officials expect most U.S. tariffs to remain in place, even if an agreement is reached. President Donald Trump has shared a private message from the NATO Secretary General praising his actions in Iran. Mark Rutte sent the messages ahead of the U.S. leader's arrival at the NATO summit in The Hague yesterday. It comes after President Trump cast doubt on the U.S. commitment to defend its allies. Bloomberg's Oliver Crook is there covering the summit. I've got to say, Oliver, we have a fantastic headline on the terminal today describing Mark Rutte as the flatterer in chief after President Trump posted the series of messages that Rutte sent to him, really congratulating him on all of the efforts in Iran, Israel over the weekend. Is that flattery going to work? Is it going to yield any results as far as the NATO summit is concerned?
Jumana, I think that the sort of title for flatterer-in-chief is a pretty competitive category when we talk about Donald Trump. But certainly Mark Rutte, the Secretary General of NATO, is in the running for it after those text messages that Donald Trump posted that he sent him on his way here to the NATO meeting. We should say also, another thing that I thought was interesting is that that message was posted, and you could see within the screen when it had been delivered to Donald Trump. It had been delivered a minute earlier. He took the screenshots and then presumably swiftly after that posted it. And it was Mark Rutte really speaking in very Trumpian language, using a lot of cap locks, praising the president's leadership in Iran, and really saying that there are big spending plans here from the NATO allies in order to hit that 5% target that Donald Trump had basically demanded of the European NATO forces here in Europe. Now, what we can say is from the beginning, from the frills to the substance, this entire NATO summit has really been organized to flatter Donald Trump and really give him what he wants. To the state dinner that we had last night with the king, we understand that Donald Trump also stayed at the royal palace. I believe he's the only leader who is staying there overnight. And again, we say that so everything has been sort of set up to really give Donald Trump a win so that he will continue to endorse his upkeeping of both NATO and Article 5. We should say there are a couple of potential points of friction, particularly with the Spanish Prime Minister, who has been reluctant to sign up to that 5% pledge, and of course Emmanuel Macron over the last few days, who said that the strikes in Iran were against international law.
Yeah, because they're not going to have a unified approach to what went down over the weekend. But I do want to pick up on that point about Spain. How much of a spanner in the works is that? And the fact that Spain aren't willing to commit to that 5% objective?
Listen, it could be a major spanner in the works. I mean, it'd be very interesting to see if there's any one-on-one contact between President Trump and Prime Minister Pedro Sanchez. You know, he was posting repeatedly on the plane over from the United States, from Washington, D.C., showing certain graphics. And basically, one of them showed a picture of Prime Minister Sanchez saying that basically we cannot spend 5% on defense and also have our welfare state supported. And of course, this has been the big criticism of the United States, that effectively they have militarily been subsidizing Europe in order for Europe to pay for its lovely, beautiful, and very sort of happy welfare states, and that is something that the United States doesn't have any interest in doing. And Jumana, the other point that we make, and something that he mentioned on Air Force One, is this Article 5 commitment. Donald Trump casting once again doubt on what it actually means, Article 5. He says there are many different interpretations. But Jumana, what we can expect from the president a little bit later today, we expect a press conference at 3 p.m., is for him to define what Article 5 means.
Yeah, people forget about the other articles, the ones about cooperation and coordination, Articles 2 and 3. Oliver Kirk in The Hague, thank you so much. That's it for our show, Horizons Middle East and Africa. I'm Jumana Versace.